The US dollar is starting to pick up strength under the hood after a brief dip. Bitcoin did not reach the top of its range and remains at risk for a serious breakdown. Asset class rotation did not change much, but sector rotation is sending us some curveballs. Here we go with Sector Spotlight. Hello Sector Watchers, welcome to the show. This is the 145th episode of Sector Spotlight for Tuesday the 20th of September, and I'm recording it on Monday the 19th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. Ladies and gentlemen, this is Sector Spotlight. Well, the rotation for asset classes pretty much continued to do the same thing as where we left it about a week ago. If you look at the daily RRG here on the right and we go back 5 trading days, 1, 2, 3, 4, 5, then you see that this is last Tuesday. We had SPY rotating back up. It was inside the lagging quadrant, but it started to pick up some relative momentum, and we had the fixed income asset classes inside the green leading quadrant but rolling over. We had Bitcoin inside lagging, picking up relative momentum, but at very low RS ratio levels. And we had the US dollar at the highest RS ratio levels, but losing relative momentum. Now, if we move forward 5 trading days to today, 1, 2, 3, 4, 5. This is end of day data, so this is last Friday. And you see that during the week, SPY continued to improve. It traveled through the lagging quadrant and is now almost hitting the leading quadrant. Bitcoin continued upward, but at the end of the week started to lose, or at least the rate of change, the speed of the increase in relative momentum started to falter, and it looks as if it's starting to roll over inside that improving quadrant. The fixed income asset classes continued downward, primarily on the RS momentum scale. So did the US dollar. And you see that at the end of the week, the commodity asset class, so DJP and GSG, started to roll up just before they were about to hit the lagging quadrant. So it's going to be interesting to see how that evolves this week. Now, how does that fit into the longer term picture? That is what we have on the left-hand side, where we have the weekly RRG for that same group of asset classes. Let me start with the Bitcoin tail, because it is in line with what you see on the daily. So both on the daily and the weekly, the tail of Bitcoin is pretty long. That is not a real surprise, because the moves in Bitcoin are, in terms of percentages, are big compared to the other asset classes. So pretty much always give you a really big tail, or really long tail, I should say. Most important takeaways here is that it is still very low on the RS ratio scale. So in a relative downtrend versus the VBINX, which is our 60-40 balanced benchmark. And the fact that it is starting to roll over inside improving is not predicting a lot of good for what we see on the weekly, because this obviously is going to rotate much faster. If this continues to roll over, then we will very likely see Bitcoin on the weekly scale follow. In terms of price, this thing can still make pretty big moves. So please be careful. I'll discuss the Bitcoin chart in a minute. I'm going to take the tails off right now because they distort our image for the other asset classes. I'm going to do it on both sides. And then we have a better angle, a better view of what's really going on. So we have the, as I said, the tails for DJP and GSG. They started to pick up last week already inside the lagging quadrant, and it looks as if the shorter term tails are doing the same. So it's going to be interesting to see how those commodities are going to move this week, and we'll have a look at the chart. I think the most important takeaway here is for the US dollar. It is still very strong, both on the weekly and the daily. It's the highest RS ratio reading. On the daily, we're still in the process of losing some relative momentum, but you can see that it is being mitigated by the flat move on the weekly tail, which is slowly starting to pick up on the RS momentum scale. So the bigger picture, the general picture for US dollar strength is still intact. If we concentrate on the stocks versus bonds comparison, then SPY is still winning, although everything is taking place very close to the benchmark, so there's not a lot of difference. And I think that is what is characterizing this market at the moment. There are a number of transitions going on. Some of them are not clear, or at least they don't fit the general narrative. I wrote a blog article about that last Friday. It's titled 2 Things I Don't Expect in a Bear Market. And that pretty much describes my view at the moment. I do recognize the long-term downtrend or the big downtrend that's still in play in the stock market in SPY, but I also see a few things that I can't quite place yet. I can't quite get a handle on what that means. And for me, when that happens, I tend to be more careful, and I tend to be on the tip of my toes to actually see what's going on. But above all, keep a very open mind to the market throwing you a bunch of curveballs. And we're going to look at that when we look at the sectors, because I'm going to break that down into offensive, defensive, and sensitive. And I hope that gives us a little bit of a better picture. Let's look at some of the individual charts. For the dollar, I prefer to look at the euro-dollar chart. And this is the daily chart, and you can see that falling trend line is still intact. It's got multiple touch points, so it's becoming a really reliable resistance line, a really reliable trend line. And as long as we remain below that line, I think the downtrend in euro-dollar, the strength of US dollar is still very much present. The trigger for more downside, and we're hovering about that level now for almost a month already, is around parity, 0.99, 0.98, 0.99. Now we are again around parity. So the market is really trying to find support here. But if that fails and that falling trend line suggests that there is more selling power, selling euro dollars, buying US dollars, so I think it's quite risky, and that could be a big mover in the financial markets when euro dollar really drops below parity and dives down to new lows. If you look at the weekly, we got that same picture, just a little bit more condensed. And this is what I mean with keeping an open mind, because look at that RSI, that is really starting to build up some positive divergence. So positive divergence, as the way I learned it many years ago, is that it is a positive divergence is a positive thing, and at the minimum it's giving you or it's signaling a pause in the current, in this case, downtrend. Positive divergence is signaling at the minimum a pause in the falling trend, or it is the early warning for a trend reversal, and then that downtrend moves into an uptrend. Now, just the fact that there is a positive divergence is not enough to call the bottom. You really need something else. You need something in the price chart to confirm that positive divergence. And if I look at this euro-dollar chart, then I think that signal, that trigger for a reversal of this trend would need to come from, I think, a break out of that channel, which right now is around 101.80, 102, maybe a little bit lower. Or, and then you have the real confirmation when we take out that previous high here, that's just below 104. we're not there yet. That's a big move in euro dollar if you got 3 or 4 big handles. So for the time being, I'm going to respect this downtrend. I'm going to be positioned with strength for the US dollar, but I'm keeping an open mind, and I have this as an early warning signal just in case things start to change here. If you look at the S&P 500, we're looking at a quite similar situation where, again, I think we need to keep an open mind. Yes, I still think that the chart of SPY looks weak. I do think we're in a downtrend. The ease of movement is to the downtrend. I've used the word or the phrase that the upside is littered with resistance multiple times in videos and in blogs, and I still do believe that that is the case. But look at what we have here. We have this series of lower highs and lower lows. We've got that completed head and shoulders pattern. Last week, we dropped below its previous lows. It's basically a confirmation of weakness. But I pointed out that the RSI is still not below its previous low. And that builds up the possibility for a positive divergence to set up here. And when I'm recording this, the market is not closed yet. It's about 20-30 minutes to go. So this is a strong day. Obviously, we're running into a resistance area, that's for sure. So when we put in a new high here and we start dropping down, then obviously that 360 area is our new target and the RSI will follow. However, when this positive divergence is really building up, as I said, at the minimum, you can expect a sideways or a pause in the current decline. And the current decline on this level of divergence, I think we should look at the 430, 387 move here. So at the minimum, if this divergence holds up or works out or builds up, then we can see some movement around the 390 area going sideways, maybe slightly up. But again, the upside will be very, very difficult for SPY. There's a lot of resistance to be found. Ease of movement still to the downside, but please keep an open eye on at least a sideways or is it going to be temporary? I don't know, a temporary up move. Here's the weekly picture showing you pretty much the same divergence. This one I think has worked out. That's why I didn't annotate it, because that followed this move here. Trend line obviously coming down. So the big move, the big trend for the S&P 500 for the stock market, still down with certainly possibility for intermediate rallies. By the way, I had some comments on the videos last week, and obviously the timing of that was absolutely great, because I said that the market was showing some positive signs. I hope that I made it clear that I thought it was all happening within that larger term weakness, and then obviously you get that big down day on Tuesday when Sector Spotlight airs, and a lot of people just want to call out and say that it was a bad call or whatever. Someone said it was Jim Cramer level. Maybe one day I'll be at Jim Cramer level, at least in terms of audience, I would say. I don't like the shouting too much, but I'd appreciate the audience. Nevertheless, and also someone said I could better take the video down. I'm not going to do that. I'll own my mistakes when they happen, because I am pretty confident that the analysis that I make is the analysis at the moment I make them. And as you know, technical analysis is going forward. Every day you get new information, and there are plenty of reasons why one would change the analysis. But to be honest, I don't really get very nervous for 1 or 2 bad days that are maybe going against my general idea of the market. So let's quickly continue. Here is IEF that is dropping to new lows, taking out support levels. That means yields, interest rates are pushing to higher levels, usually not very good for the stock market. So that would be supportive for weakness in the stock market. And then here we have DJP and GSG. I'm going to talk about them together because let me put that here on the left screen. That's probably a better idea. So you can see that both these commodity charts are, they made a new lower high, which goes against the idea of a long-term turnaround for commodities, although there is still plenty of room, because the real level of support here, You see the annotations, and especially the one here around 26 and this one around 18. These are the long-term levels where they broke out. So still room for some downside, but when this holds, when 32 holds and we take out that most recent high, then I think that we can see a continuation of the positive rotation for both commodities and commodities in general. And that's what you see right here on this RRG, where the commodity tails are picking up strength. Very quickly, Bitcoin. I thought, or my long-term analysis, and I really hope that I made that very clear, is that Bitcoin US dollar is not in good shape. The long-term chart for Bitcoin versus the US dollar, I think, has completed a major double top between roughly 30 and 65,000, that is. So that is a 35,000 gap, $35,000 range. And if you take the percentage of that, it's about 46%. If you take 46% of 30,000, you're around 13,000, which is where I have my major support level and my potential price target. And the funny thing is that if you look at 25 to 18 as a range, and you take that percentage and you plot that downward, you will also get to that 13,000 range. So with that new high, that new lower high in place, here on the weekly and here on the daily, the risk of a decline is getting even bigger. So please be aware, if Bitcoin drops significantly below 18,000, then there is a serious risk for a further decline to 12.5. And bear in mind, the lower you go, $1,000 at 65 in terms of percentages is a lot different than $1,000 at 18,000. So we're getting to an area where $1,000 in Bitcoin is really going to be very, very meaningful in percentage terms. Positive divergence still keeps up possibility that we get a little uptick inside that range, but that 22, 8, 23 area is now a new resistance level. So it's becoming more and more difficult for Bitcoin to go up. Those sellers keep coming back at lower levels. I think this market is seriously at risk, but we'll have to wait and see if and when it really happens. When we switch to sector rotation, the market is throwing us some curveballs, I'm afraid. And I wrote about that in an article last weekend, and it's titled 2 Things I Don't Expect to See in a Bear Market. I already mentioned it in the previous segment, but here's the article. The one thing is the divergence that we just discussed, and the second one is what I want to talk about here. That is the rotation, especially for the consumer discretionary sector. If we start with the regular look back, then you got the weekly RRG on the left and the daily on the right. And there's a few things that are standing out. I'm going back and forth, and just let's grab the bull by the horns and look at consumer discretionary, because it is a tail that stands out on the weekly. It's moving horizontally, which means that it is at a stable relative momentum level, and it's gaining on the RS ratio level, on the RS ratio axis. So this is a relative uptrend versus the S&P 500 that's moving steadily higher. It's not accelerating, it's not decelerating, it's moving steadily higher at stable momentum. That's a good thing. And if you look at the equivalent on the daily chart, then you look at this tail here. And this is a strong tail. This is a sector that is picking up strength, both in terms of relative momentum and RS ratio. So I can't do anything else than just keep an eye on this from a positive perspective. Consumer discretionary is one of the stronger sectors at the moment. It's picking up both relative momentum and to a lesser degree, it's picking up relative strength and to a lesser degree relative momentum. Given the general picture with a lot of uncertainties and flashing lights for a weaker stock market, I just mentioned higher rates, stronger US dollar, weakness for the US internationally. I haven't looked at that for a while, but that is what it is. This is weird. This is not like what you expect in a bear market. So we got to keep an open eye. Got to keep an open mind to this, so to say. Other tails that are interesting. We've been looking at those defensive rotations for a while. Here is healthcare staples rapidly moving towards lagging, and here's utilities picking up. That's the strongest sector in terms of relative strength ratio. And then it's followed by energy, which is also starting to move higher back towards the leading quadrant. Another sector that I really need to show you is communication services, because communication services here on the weekly has briefly rotated through the improving quadrant and is now rotating back into lagging for the last 2 weeks. And if you look at the rotation for communication services on the daily RRG, then you can see that this is absolutely confirming the weakness that we see on the weekly. So we have this rotation back to lagging on the daily, and it's confirming the already weak tail on the weekly. So where consumer discretionary is actually picking up strength and looking really good, communication services is back to looking really bad. So that's probably a slam dunk, consumer discretionary versus communication services. Real estate is another sector that is really pushing down into the lagging quadrant, and financials is surprisingly strong, I have to say. Now let's break this down into the 3 groups that I mentioned. These are the offensive sectors. Now look at this rotation. Here you got consumer discretionary. We already looked at that. You can see that is a very nice, strong rotation. Followed by financials, also a pretty offensive sector. You got materials that is inside lagging, but it's picking up, definitely in terms of relative momentum. And then the only sector out of these 4 that's really weak is real estate. If you look at the defensive sectors, then we got staples and healthcare moving towards the lagging quadrant, and the only defensive sector that's really good is utilities. That's not really what you want to see in a bear market. You want to see all these 3 rotating back up or strongly inside leading. And then there's the sensitive group. We already spoke about communication services. We know that energy is on the way back up. And then technology is rotating back down. It's an important sector. And industrials is picking right up. So I'm kind of breaking my head about what this message is that the market is sending us here. At the minimum, I'm going to be very, very careful. I'm going to keep an open eye to strength coming from a very important sector like consumer discretionary, and the fact that defensive sectors are not as strong as they used to be. And I'm also going to keep the option open for a further decline, because this can rotate back down and put the market back into its downtrend when we take out those lows in the S&P 500 chart. Let's quickly look at some of these individual charts. Here is communication services. As you can see, breaking again below a previous low, confirming the relative downtrend. This is really a very weak sector. If we look at financials, then we're holding above this cluster of highs here from a couple of weeks ago. But more importantly, the relative strength is bouncing up from a support area. I believe that when this falling trend line is taken out, you will see more strength in financials. But from a relative point of view, this is definitely a sector to be aware of. Technology. So far, we're holding up above 125, which is an important support level. But what I don't like is the fact that the relative strength line is dropping below its support, its previous lows. We had the breakout on the upside that was looking good, but it's now reversing that course. And you can see that the RRG lines are moving with it. that's not a good sign. And that is a sector that's important for the market as a whole. So technology and discretionary, they could be offsetting each other. Here is real estate really confirming the weakness. We have the head and shoulders. We have here the kiss of that, the old support becoming resistance, respected twice. It's now resting at the level of the previous low, but look at this relative strength line. That's moving below a very important support line, and it starts to move lower. That is weak for the real estate sector. And here is the consumer discretionary chart, and I have added the closing prices as a thick line to emphasize them. And what you see here is that it is actually respecting those previous highs and lows as support and resistance levels. But you also see the strength and relative strength here moving back above that horizontal level. As long as we are remaining above, let's say 154, 155, that is pretty strong for consumer discretionary. If we drop below that and relative strength starts to move lower, then we're getting back in sync. But this is the sector that I'm keeping an eye on, because it could be the very early warning signal for a turn in the market. But it's way too early to call that bottom yet. But this chart is keeping me alert. And that wraps up the show again for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. Please let me know what you think, and I'm looking forward to seeing you again at a new episode of Sector Spotlight, same time, same place, next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.